Good morning. Wall Street stocks lost steam near all-time highs while bond yields tumbled after weaker than estimated US retail sales reinforced the case for the US Federal Reserve to cut interest rates this year. Bitcoin slipped, gold fell and the greenback traded lower. At the close of trade on Tuesday, the Dow Jones index rose by 52 points or 0.1%, but the S&P 500 index dipped 23 points or 0.3%, and the tech-heavy Nasdaq index shed 136 points or 0.6%. The S&P 500 and the Nasdaq index edged lower, while the Dow Jones index notched a fresh record high as investors digested corporate earnings and disappointing retail sales figures that kicked off a slew of US economic data sets due to be released through the week. US retail sales unexpectedly stalled in December, suggesting consumers provided less firepower for the economy as the year ended. The disappointing figures indicated the burst of activity at the start of the holiday shopping season proved to be short-lived. Households remain frustrated over the high cost of living and worried about the job market. The value of retail purchases unadjusted for inflation was little changed after a 0.6% gain in November. Excluding auto dealers and gas stations, sales were also flat. 8 of the 13 retail categories posted decreases, including declines at clothing stores and furniture outlets. The breadth of consumer spending is also a concern. While stock market gains may be boosting spending amongst wealthier households, there are signs discretionary spending is less robust for lower income Americans relying primarily on more moderate wage growth. Under pressure on Tuesday were shares of big box retailers Costco and Walmart, which fell around 2% each on investor concerns about consumer spending. The S&P 500 consumer staples sub-index dipped 0.6%. Financial stocks also took a hit, finishing down 0.8% after tech platform Altruist launched a new AI-powered tax planning tool. Shares of LPL Financial declined 8.3%, while shares of Charles Schwab dropped 7.4% and Morgan Stanley dipped 2.5%. But interest rate sensitive utilities and real estate stocks topped the S&P 500 performers, lifting between 1.4% and 1.6% as Fed rate cut hopes grew after the disappointing retail sales data. The communication services sector fell 0.8% on the index, dragged by a 1.8% decline in Alphabet shares. The Google parent said it sold bonds worth $20 billion in a 7-part offering. Datadog shares jumped 13.7% after the cloud-based monitoring and analytics platform beat quarterly estimates. Gains in Walt Disney and Home Depot of about 2% propelled the Dow to a fresh peak, offsetting a 1.5% decline in Coca-Cola after the company missed Wall Street estimates for the fourth quarter, particularly on revenue, and Coke offered a more conservative 2026 full-year sales outlook than expected as the Atlanta-based soda company works to boost its sales overseas. Consumer discretionary stocks advanced 0.5%, buoyed by Marriott. The hotel operator jumped 8.5% after saying fourth quarter revenue per available room grew 1.9%, driven by an international gain of 6%. Meanwhile, shares of S&P Global dipped 9.7% to the bottom of the S&P 500 index after forecasting 2026 profit below analyst estimates. US government bond yields slumped on Tuesday after weaker than expected US retail sales data bolstered expectations for at least 2 Federal Reserve interest rate cuts this year. A separate report showed that the employment cost index, the broadest measure of US labour costs, rose 0.7% in the fourth quarter after advancing 0.8% in the third quarter and below an estimate for 0.8% as demand for labour has waned. Other data showed US import prices were little changed on a year-on-year basis in December after falling 0.1% in November. The US Treasury sold $58 billion worth of 3-year notes at a yield of 3.518% into solid demand. The US 10-year Treasury yield slid 6 points to 4.14%, on track for its fourth straight day of declines. The yield has dropped more than 14 basis points over that time frame, its biggest 4-day drop since mid-October. The shorter dated US 2-year Treasury yield, which typically moves in step with interest rate expectations for the Fed, decreased 3 points to 3.45%. Europe's benchmark share index ended slightly lower on Tuesday as investors weighed mixed corporate updates, with BP's decision to suspend its share buybacks offsetting gains in the automobile sector following an upbeat forecast from Ferrari. The Pan-European Stock 600 index finished 0.07% lower, just a whisker away from its all-time high. BP dropped 6.1% after the UK energy giant posted quarterly profit in line with analyst expectations and suspended its share buyback program as it wrote down around $4 billion in its renewables and biogas businesses. The broader energy sector slipped 1.6%, but in contrast, the automobile and parts sub-index gained 2.5% after Ferrari said its core earnings would rise slightly in 2026 while beating analyst estimates for the fourth quarter of 2025. The luxury car maker's shares jumped 10.2% 0.2%, marking their biggest one-day gain since March 2020. On commodity markets, global oil prices edged down on Tuesday, snapping a two-day winning streak as traders passed mixed signals on the risk of supply disruptions in the Middle East. The Brent crude price dipped 0.3% to $68.80 a barrel, and the US NYMEX crude price slipped 40 cents or 0.6% to $63.96 a barrel. Gold futures settled 1% lower at $5,031 an ounce as the market consolidated ahead of US jobs and inflation data that could offer further clues to the US Federal Reserve's interest rate outlook. Copper futures fell 0.8% under pressure from rising inventories. Iron ore futures edged up 0.2% to $100.84 a tonne as traders weighed low feedstock prices and declining shipments against soft demand. Australian shares are poised to open higher on Wednesday, though a potential extended slump in CSL could dent in an opening in advance. We did see its profit fall 7% on weaker plasma sales, and it lifted its buyback to $750 million. Also yesterday, its shares plunged 5% after the sudden exit of its CEO, leaving brokers unimpressed. The global biotech giant wasn't alone in shuffling its top executive. Helen Lofthouse has abruptly quit the ASX with no replacement in place after a period of intense regulatory scrutiny. According to the latest SPI futures, however, the ASX 200 index is expected to open up by 29 points or 0.3% on Wednesday. In Australia on Wednesday, lending indicators are scheduled for the December quarter, with Commonwealth Bank economists forecasting the value of home lending to increase by 6%. Meanwhile, Reserve Bank of Australia Deputy Governor Andrew Hauser speaks at the Australian Chamber of Commerce and Industry and Business Sydney Business Leaders Lunch. It's a big day of earnings results locally, with AGL Energy, CSL, Commonwealth Bank, Computershare, Evolution Mining and SGH all scheduled to issue earnings. The Commonwealth Bank's released its results and it reported a 6% rise in its first half cash earnings on Wednesday, propped up by robust growth in lending and deposit volumes. The country's biggest lender by market value reported cash net profit after tax of $5.45 billion for the 6 months ended December 31, compared to market analysts' expectations for $5.19 billion. On the US economic calendar, Wednesday brings the closely watched January employment report. Non-farm payrolls are expected to rise by 70,000 in January, up from 50,000 in December. The unemployment rate is seen holding steady at 4.4%. On Wall Street, Cisco, McDonald's, AppLovin, Kraft Heinz and Albemarle all release earnings results. The US dollar traded mostly lower against major currencies on Tuesday, following data indicating slower growth of the American economy. The Aussie dollar lifted from 70.63 US cents to 70.89 US cents and was last trading at 70.7 US cents. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in and have a wonderful day.